Hey everyone, welcome back to the Anti-Blue Falcon. Look, if you're sitting on a 100% permanent and total rating and you're still writing real estate tax checks to your county every year for property taxes, we need to talk right now. Depending on where you live, that 100% rating could be wiping out your entire property tax bill. I'm talking 8, 10, even $15,000 depending on your house value back in your pocket. But the thing is, some states will save you maybe $200, same rating, just complete different financial reality. So I'm going to walk you through the best states where your tax bill drops to zero and the worst states where you're basically on your own. And I'm saving the biggest tip for the end, a loophole in one state that lets you go back in time and get a refund check for taxes you already paid. And this is something that most vets probably don't even have a clue that exists. All right, let me break it down with some of the heavy hitters of states. Texas. If you're 100% P&T or rated individually unemployable, the entire appraised value of your homestead is exempt. That means $0. Doesn't matter if your house is worth $300,000 or $1 million, you're paying nothing on property taxes. And it gets better, but I'm going to save that for the end. Florida. Same deal. You need to be 100% service connected and permanently disabled. But once you qualify, your homestead is fully exempt. Now you'll still get a small bill for things like trash pickup or storm water fees, maybe $200 to $400 a year, but your actual property taxes are gone. Alabama and Mississippi, full exemption on your homestead. No income limits, no value caps, you're good. South Carolina exempts your home plus up to 5 acres of land. If you're out in the country on a bigger piece of property, this is a solid option. Michigan and New Jersey, they both offer full exemptions for 100% P&T. New Jersey even covers the lot your house sits on, which is a huge and a high tax state. In Virginia, here's where it gets tricky. They'll exempt your dwelling and up to 1 acre of land. And if you got a 10-acre farm, you're paying taxes on those other 9 acres. Still a great benefit, but know the limit. Now, a couple of states are almost as good, but have some caps. Illinois exempts the first $250,000 of your equalized assessed value, since EAV is usually a third of market value that covers homes up to about $750,000. Pennsylvania offers a full exemption, but, and this is a big but, you have to prove financial need. If your household income is over roughly $115,000, you don't qualify. So you could be 100% disabled, working a decent job, and Pennsylvania is going to say no. California offers disabled veteran exemption, but it's capped around $170,000 in assessed value. In most California, that barely makes even a dent, so useless. Bottom line, if you're planning a move and taxes matter, Texas, Florida, Alabama, and South Carolina are your best bets. No games, no limits, just zero tax bill. Now let's talk about the other end. The states that technically offer something, but it's so small you'll barely notice it. Indiana deducts $14,000 from your home assessed value. That's it. Math, if your local tax rate is 2%, you're saving about $280 a year. That's it. That's for 100% disabled vet. West Virginia, $20,000 deduction. At a 1.5% tax rate, you're saving maybe $300. North Carolina, $45,000 deduction, depending on your county's rate. That's somewhere between $400 and $700 a year. In Kentucky, about a $49,000 deduction, you'll save $500 to $600 annually. In Rhode Island, this one's rough. Most towns offer a flat credit of $150 to $8,000 off your bill. You're still paying the vast majority of your taxes. Then you've got states that disqualify you completely if you're too successful. Like Arizona is the worst offender. They have an exemption, but if your home's assessed value is over roughly $30,000, which translates to market value of about $300,000, you get kicked out of the program entirely, zero help. In today's world, that disqualifies pretty much every home in Arizona. Kansas offers a refund capped at $700. Even if your tax bill is 10 grand, the most you're getting back is $700. And I get it. You're not moving just for tax breaks. You've got family, job, roots. But if you're already thinking about relocating or you're retiring and trying to figure out where to land, this is the places, the real money. Again, over 10 years, that's a difference between $100 $2,000 in your pocket versus $3,000. Now, golden tip. All right. The one I promised you, here's the golden tip. If you're in one specific state and you've been paying property taxes for the last couple of years because you didn't know about this exemption, you might be able to get that money back. I'm talking a check from the county for taxes you already paid. Now stay with me and I'm going to give you this tip right now. In most states, if you miss the filing deadline, usually March or April, you lose the exemption for that year. Tough luck. You pay the full bill. Maybe you can apply next year. You're fucked. But in Texas, it doesn't work that way. The great state of Texas, let's say you got rated 100% P&T in 2023. You've been paying $8,000 a year in property taxes. It's now 2026. You finally learn about the exemption from this video and you file. Texas will refund you for 20, 23, 24, and 25. That's $24,000 back in your account. The Texas tax code allows you to file late and go back sometimes up to 5 years. And the county has to cut you a refund check for the taxes you shouldn't have paid. Now, there are a couple of things you need to know. First, you still have to prove you were qualified during those years, meaning you were 100% P&T rated at that time. Second, you'll need your summary of benefits letter from the VA showing your rating date, your DD-214, proof of residencies, and your property deed. Take all that to your county tax assessor's office and file for the retroactive exemptions. Most counties will process it within 60 to 90 days and then they'll issue you your check. Most veterans assume they missed the boat. They think, well, I should have known better, that's on me. And they just keep paying. But Texas specifically wrote the law to protect veterans who didn't know. They built in that safety net. So if you're in Texas right now and you've been paying property taxes with a 100% rating, stop this video, go to your county assessor's website, get forms 50-135 and form 50-114, file it with a VA disability letter and ID matching your home address on your deed, even if you're 2, 3, 4 years late, and you could still get that money back. Now, if you know a veteran in Texas who's been paying taxes, send them this video, send them the info. That's the whole point of this channel. I'm trying to take care of each other. Nobody should be leaving $20, $30, $40, $50,000 on the table because they didn't know the rules. All right, that's my breakdown of some of these gold standard states like Texas, Florida, Alabama. Make sure you're filing for that exemption. If you're in a low benefit state, at least know what you're working with. And if you're in Texas and you've been paying those taxes, you didn't have to, get that refund. Don't leave money on the table. You can go to class 6 and get some drinks. This helped you. Hit the like button. If you know a vet who needs to hear this, share it. And if you got questions about your specific state or county, drop them in the comments. I'll do my best to point you in the right direction. Thank you. Keep looking out for each other. Go look at other sources on the other YouTubers that have been putting out great information too. I'll see you in the next one.